Hey guys, how's it going and thanks for coming. I'm Nick, this is Real Life Money, and it's real simple, just subscribe. So in this video, we're going over if we are already in recession, because there's all types of talk about recession, and how to really prepare in 8 ways. I do have some charts for you guys to actually show that we might certainly be in recession right now, because we usually find out after the fact that we've been in recession. So could that be right now? We got charts to possibly support that. So I like charts, you like charts. I'm going to show you some charts, and then we're going into how to possibly prepare for this. So I want to be real about it with you guys. None of this fake stuff with this news things and everything and all this fabricated stuff. No, I want to, whether it hurts or not, we got to understand the harsh truth, and we got to look at it now. Time for some graphs. So this first one's pretty interesting, is household debt service payments as a percentage of disposable personal income. What that even means is basically how much of people's extra money is going toward debt. Well, you could see since 2008, it's been on a real steady decline for quite some time, and it never really stopped, and it's continuously decreasing. While, interestingly enough, on the other hand, you could also see that households and non-for-profit organizations' consumer credit liability level, also known as debt levels, is continuously increasing, actually really rapidly. This is more specifically federal debt, also total public debt, and you can see that's just as fantastically going up as always. Now also moving on to the federal funds rate, which is very interesting, because you can see how this chart looks around 2008. Toward the end of that chart, it completely plummeted because they wanted to basically inject money into the economy. And you can see at the very end over there, they're starting to decrease rates again. Supporting this claim is the actual total assets of the Federal Reserve, which is not part of the government, by the way. Interesting to know. So you could see that in 2008, it completely skyrocketed, which basically tells you, like the last chart, where they completely bought a bunch of assets. And they've been continuously buying until 2014, where it steadily kind of remained the same. Then they tried to decrease their total assets by selling all that debt that they ended up buying. Well, yeah, that didn't work, and they completely reversed, because at the very end again, it's increasing again. More debt buying. Next chart is spectacularly wonderful, because this is looking at corporate profits before taxes. I'm choosing before taxes because anyone could really manipulate taxes, and we all know that type of stuff. But before taxes is a little bit more interesting. You could see the recession in 2008 completely plummeted and then rebounded, of course. However, corporate profits seem to be, or peaked around 2014, and has been declining since then. I don't know if you guys know much about technical analysis, but that kind of seems like a downward sloping pattern right now. Corporate profits are very interesting because the United States is a consumer economy. Businesses do well when people spend money on things. If corporate profits are declining, that means people are spending less on things. That's why this could be an issue. Now, which is completely not gloomy whatsoever, of course, is the good old stock market, which is completely at new all-time highs, almost making them every day or so. Does that really make sense? Not too much. Now, people might argue about the unemployment rate. Whether that number is actually true or not, we could still look at the patterns. You could see in 2008, it completely skyrocketed, and right now we were at all-time lows. Well, yeah, they're at all-time lows right before recessions, obviously, so that could possibly mean at any point it could jump, just like every other time. So when you're hearing all-time low unemployment rates, that's usually what happens before a recession. Now, is this fear-mongering? No, these are kind of facts, because charts are cool to look at. And we also have to understand that things go through business cycles, or just cycles in general. Everything does. There are ups and there are downs. So obviously those are just a few quick charts that doesn't determine the whole entire economy. However, we have been in a bull market for quite some time, and it seems like every decade there's a switch in how things are going. So with the year 2020 coming up, some people thinking that's when recession is coming. I'm already getting scared. And that's why we got to talk about 8 ways how to actually prepare. Number 1 is selling everything and run. Not really. First one is actually to reevaluate your money, wherever it may be, your total amount of money in every single part of the universe. So you should be looking at your stocks, you should be looking at your bonds, you should be looking at your house, looking at your salary, heck, even the buried money in your backyard. Now, I am not a licensed financial advisor, but you can choose to reallocate your portfolio. You could choose to meet with a financial advisor to have maybe more or less stocks, more or less bonds, or whatever you seem is less risky for this type of environment. Now, if you're for the long term, you really don't have to care about this stuff, but if you are retiring relatively sooner, you might want to look into this a little bit further. I learned to not only focus on the upside, but to focus on the downside. Number 2 is paying off as much debt as humanly possible. Now, you probably should have been doing that anyway, but here we are. Number 3 is don't get into any future coming debt, which you probably should have been doing anyway, but here we are yet again. Debt is usually the main reason why these things happen. So if you want to avoid that completely, you should probably avoid debt completely as well. One great quote from the movie The Big Short: you should not, and I'm paraphrasing, you should not mistake leverage or debt as genius. And I'm not saying I'm just trying to be a messenger and being a nice guy for you. Now, number 4 is, people might have been waiting for a while on this one. However, to possibly delay or wait on large purchases, more specifically houses. You can see in 2008, obviously that was focused with housing, and houses completely dropped. They probably, depending on the area that you lived in, however, a lot of prices dropped in half. So if your house was normally worth $500,000, guess what? Now it's worth $250,000. Not to say that every recession or depression is focusing on real estate. However, when the economy does bad, kind of everything does bad with it. Number 5 would be to look at your job. Look at your industry, look at your department to see how vulnerable you may be. Now, this might be almost impossible to determine because it could really affect multiple industries at the same time. However, if you're in a position where it's kind of wobbly, the foundation really isn't quite there in a job, well, a bad economy can completely wipe that out. So you might want to look for a more stable foundation. Which would lead us to number 6, would be brushing up on our resumes. Now, I don't always run from my problems, but if I do, it wouldn't be in flip-flops. Don't wear the flip-flops. You gotta wear running shoes. Whether you wish to run or not, you can. Whether that's a bad analogy or not. Plan on running. It's simply better to be prepared than not. Have your options open. And it's almost a fact that you cannot run in flip-flops, which is why I hate them. Number 7 is a little bit of communication, would be to actually ask family members, people you work with, people in the industry that you're with, that has actually went through the previous recession in 2008, 2009. Now, yes, it's not going to be completely the same. This does require people to have experience and age on their side. So we're not going to be asking like an 18-year-old how they prepared for the last recession because they weren't alive. So we can say that history might not always specifically repeat itself. However, it does rhyme. When you learn a little bit of how life actually happened during a recession, you might be able to prepare that way by reverse engineering, seeing what happened so you could actually prepare for that. And number 8, which I think a lot more people should completely take advantage of, is how could you actually benefit from something like this happening? Is something like this going to occur? Most likely, just because things go in cycles. There are ups and there are downs. Essentially, with many things in life. So if you know a down time is going to come, learn how you could actually profit from that. This could be with a certain specific type of portfolio allocation, maybe investing in certain types of investments, maybe investing in gold, maybe stockpiling cash, so when values go down they are really cheap, so you could buy them at a discount, which then they would rebound afterwards. Ray Dalio, Paul Tudor Jones, both billionaire hedge fund managers, including Warren Buffett, a billionaire investor in the stock market, they're all seeing some type of thing coming up in the near future. You could even see with Warren Buffett, he is stockpiling cash so he could buy things cheaper in the near future when they do collapse. Ray Dalio, an economist, knows a lot, very intellectual human being. I think you should definitely look him up. He actually published a news article. Originally it was on LinkedIn. It was of paradigm shifts. And it was kind of a longer video, but I did an explanation of that. I read the article and it was very interesting. So you could definitely learn a lot from that. But it was very interesting how a lot of these cycles seem to be on average every 10 years. Each decade brought something different to the economy. So this decade, from 2008 to where we are now, it was a growing economy. Well, this next decade could be completely different. Essentially, you cannot have cake in a crisis forever. History shows that it'll eventually end. So, thank you so much for watching, guys. If you have any questions, comments, or concerns, please leave them down below. I'd love to hear what you guys have to say. Do you think we're in a recession now? Do you think we're going into one in 2020? And how are you preparing for such a thing? So, thank you so much for watching. Really appreciate it. And I'll see you in the next one.